So we move to Chapter 3, the regulatory and conceptual framework. This particular chapter sort of sticks out for me in terms of the 18 chapters in the FA course in a couple of senses. The first, as you will have seen as you read through the study hub, is that it's the only chapter really that is mainly discursive, or indeed completely discursive. No reference really to numerical areas. That makes it stand out in one sense. And linked into that is really the amount of detail. There is a lot of detail here in relation to the standards process and indeed the various groups that surround this regulatory and indeed conceptual area. And I think for that reason, it should be approached in bite-sized chunks. In other words, I would break this chapter down in terms of your study and in particular your revision and just take it in small chunks, because I think approaching it as a sort of a job lot, trying to spend 3 to 4 hours learning everything, I think maybe that won't result in the best outcome. So I think little and often with this chapter. I'll explain a little bit more as we go through. Let's take a look at the first area for us here, the regulatory framework. So what do we mean by that? Well, I've cut and pasted the diagram out for you from the study hub. And indeed, you'll see that there are, broadly speaking, sort of 3 main areas in terms of the various groups, boards, trustees, etc., that are linked into the whole area of the conceptual and regulatory framework. Now, we'll explore these in a little bit more detail in a moment, but in essence, in terms of this introduction, what's this chapter about? Well, really the chapter is about what surrounds the whole area of producing, good quality, high-end, and indeed useful financial statements. In other words, without having a proper and comprehensive governance structure to support the setting of standards, and for standards I think just sort of let's read guidance. Without having that, I think it's very, very difficult to place trust and indeed place reliance on published financial statements. So that's really the essence of it in terms of the reason why we have such a comprehensive group of individuals and indeed boards, etc., surrounding and within this whole area. So moving on from that, let's look at the sort of the 3-tier structure as we saw referenced in that particular diagram. Really, the first area is, I guess, the standard setting. So really coming up with the guidance and indeed the related activities. So, for example, getting advice or interpretations or post-implementation, etc. The next area of governance strategy and oversight is an interesting one because really, standard setting boards, interpretations committee, etc., they rely on input from everywhere. From accountants in public practice, from accountants within commerce, and indeed industry, from government bodies, from overseas jurisdictions, etc., etc., etc. So the governance area is key, and indeed oversight and foresight is also important. I mean, business changes over time. You only have to look at the business environment now and look at it 30, 40 years ago, and you can see there are a multitude of areas that we require input on that change rapidly. Outside of that, accountability, and this has become more and more important in the last 30 years or so in a variety of different ways. For example, in terms of accountability, let's think of the accountability of directors of listed companies, for governance. Let's think about the area of corporate governance. You only have to look at corporate scandals, let's say Enron in the US, or indeed Bearings in Asia. You only have to look at these areas to think that at the end of the day, these standard setters have a job to make sure that people can rely on financial statements, and that the individuals concerned with producing financial statements know what they're doing and they have the competence to do so, but also they're serious about their stewardship role. In other words, the idea that they're entrusted to look after assets of owners, i.e. shareholders. So the area of accountability in relation to standards is very, very important. Moving from there, when we think about national bodies, so over and above the boards, trustees, committees that we've just touched on, that we'll go into more detail on in a second, obviously different countries have different requirements. Now, when we say national bodies, we're talking about different jurisdictions. They may, in fact, adopt IFRSs as standards for their own country. They may use IFRSs as to develop their own guidance. Outside of that, they may, excuse the typo there, help develop their requirements, but possibly use IFRSs to determine if their standards are sufficient. So what we're talking about here is government bodies or national bodies can, in their own right, develop standards, but these IFRSs may form guidance in some way, shape, or form. Now let's look at the first area of IFRS Foundation trustees. This is quite straightforward, and just going back to my point about the typical emphasis on OT questions for the FA exam. For me, on a very basic level, if we understand what each committee or group or indeed board, if we understand their basic role, then that's a good starting point. That's our sort of minimum starting point. And if we do understand the basic role, for example, of the trustees, i.e. Overseeing the standards board and also providing assistance to emerging economies or SMEs, etc., then that's a good starting point. And certainly with the variety or many questions that we'll see within the FA OT exam, they will focus on what does this particular board do, or what's the main area it's concerned with, e.g. the trustees. So this is a good starting point for us in terms of building our pass or success house for the FA course. This one's quite straightforward. The trustees, it's clear what they do outside of assisting emerging economies and indeed SMEs to boot. Okay. Now, in terms of the International Accounting Standards Board, probably, a little bit more emphasis on their importance here. We're talking about experts, okay, with a variety of practical experience across the board, you name it, in terms of auditing, in terms of setting standards, financial reporting, education, etc., etc. So really, these are the sort of go-to guys and girls who form the backbone of the standards and the development of standards as we see them. This is the birthplace, if you will, of standards going forward. Okay. Now, outside of that, in terms of who they are, well, more often than not, professional qualifications in some way, shape or form, with obviously an accounting bias, 14 members, and indeed over and above qualifications, certainly relevant experience. So in essence, all technical matters responsibility for, and indeed complete discretion in developing future standards. Note that in terms of the publishing of standards, and indeed anything, drafts and final interpretation, a super majority is required. What we mean by that is obviously a high majority. We're talking about sort of 95%. So it's not just a question of, let's say, 55% feel that XYZ issue is bang on, 45% don't. In order for these standards to be published, to be developed, to be outlaid, we have to have strong agreement. Okay. Outside of that, the sustainability standards board, ISB. Now, in terms of the role, fairly straightforward, and this sort of brings me in a slight tangent. When we think about sustainability, or indeed we think about sustainability-related disclosure standards, what we should be aware of, and I'm sure that we are aware of just from broad and general knowledge, is that sustainability, and indeed the whole area of corporate social responsibility, has become more and more important over the last 10 to 20 years. Now, what we mean by sustainability, we should know, is just the idea that we need to preserve the world's resources for future generations, natural resources. And indeed, there is various evidence, as you and I well know, that we haven't always been doing that. So in essence, what we're talking about here is a fairly recent phenomenon whereby there has been an emphasis placed on the idea of sustainability and indeed what companies, what entities are doing. In other words, in terms of just a simple example, emissions, waste, carbon zero, etc. And note that we link in here with investors. And that's important because certainly when we think about areas such as corporate social responsibility, and there's the idea of being a good corporate citizen and being pro-community, pro-staff, pro-suppliers, really investors certainly in recent years have become much more savvy, much more knowledgeable on this area. And broadly speaking, you'll find that some investors want to know exactly what this particular company or this particular listed company are doing in terms of sustainability efforts and indeed actions, not just talking about it, but and not just window dressing, but what are they actually doing? And that's really what leads to this area of sustainability-related disclosure standards. Okay. Outside of that, the advisory council. The role, as you would expect, is simply to sort of advise the ISB, certainly the trustees and the ISSB, in relation to a variety of different areas. This will be made up of a number of different individuals, relevant practical experience, broad practical experience, certainly qualifications as in auditors, etc., and indeed members of the public who will be investors or prospective investors in businesses.